What's up everybody? Welcome to the Stocks channel. My name is Cory and today we finally saw volatility coming back to the market and we did see selling across the board in the indices. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY we did go down today 0.37% and we did hit both of those critical levels that I've been giving you intraday and we closed right in the middle. Remember, the critical resistance is 420 and the critical support is 416. And we did see both of those levels being tested today. However, we still don't have a price action break and close above or below either level, so we still need to be patient. Right now, we can see the price action is definitely looking like it wants to roll over, but we can't get overconfident that the market is rolling over until we get the price action validation, and that will be a price action close below 416. Remember, a price action close below 417.5 is also going to be a warning sign. Now, in the other direction, if we get a price action close back above 420, that will start validating the next price targets above at 423 and 425. But remember, we do have a lot of volatility possibly coming into the middle of June. And if you haven't already watched that video where I go over those 3 scenarios, make sure you watch that video and I will link it above because that video is going to be very critical going into these next couple of weeks. So on SPY, remember that we still have the benefit of a full bull trend and the price action has not yet broken down, so there's no reason to get overly bearish just yet. We need to wait for the price action to do all of the talking, so continue to watch the critical level at 416 for support. If 416 breaks down, we're going to be looking for the gap closes at 411 and possibly even coming as low as to close the gap at $400. Now to the upside, we need to see the break over 420 and that will validate that we're likely going to see the new all-time high prices at 423 and 425. So continue to be disciplined and be patient and let that price action verify which direction we're going, and we're very close to knowing exactly where this market wants to go. On the NASDAQ 100 triple Qs, we saw a lot more selling today, going down over 1%, and we did test that critical support that I gave you right there at 328, which is that 20 simple moving average. Remember that the triple Qs don't have that benefit of a full bull trend because that 20 simple moving average is below the 50 EMA. We also see the 5 EMA rolling over, and we could be starting to see the early beginnings of the triple Qs rolling over and getting ready to go for another leg lower. So wait for that price action confirmation close below 328. And that does mean the triple Qs are likely coming down to close the gap at 323. We do have a support trend line, and if that breaks down, we could easily come down and close the gap at 315. And if we continue to see selling going into the middle of June, we're going to be looking for a price target somewhere in the low 300s around 309. So there's definitely plenty of downside risk, but don't look ahead. You need to wait for the price action confirmation break below 328. And we have yet to see that. Even though it could be right around the corner, we don't want to do any guessing or make any assumptions. We still have critical resistance above at 332.5 and 334.6, with 334.6 being that critical resistance level we need to see the triple Qs breaking back above to get bullish on the market. As far as volume goes, we don't see anything out of the ordinary. Even though we did have a red day, we didn't see a huge spike in volume, which is actually a bullish indication that we don't see huge waves of selling just yet. That could change at the drop of a hat, so don't get overconfident and continue to watch the critical price action closes. On the Dow Jones, we were relatively flat, going down only 0.1% today, and we still see the Dow Jones closing back above the 5 EMA and still holding on to the bullish trend. Intraday, the Dow Jones did find support at the critical support level, which is that 20 simple moving average at 343.5. The Dow Jones still has upside critical resistance at 348, and a break and close over that could mean we're retesting the previous all-time high at 350. So continue to watch that critical support at 343.5. And if that level does break down, we could be coming back down to retest the 50 EMA support, which is now at 338. On the Russell 2000, we dropped 0.84% today, but intraday we did see a lot more volatility and we did come down and push on that gap below at 224. That gap did not yet close, so there's still downside risk at 223.75. The price action did close back over the 5 EMA, but remember, the Russell 2000 does not have the full bull trend because the 20 simple moving average is still trading below the 50 EMA. So right now, the Russell 2000 is struggling at that resistance level at 227, and we haven't yet seen a breakout of the resistance trend line at 228. So your downside risk is going to be the gap close at 223.75 and the 50 EMA of support at 222, with your upside resistance breakout at 228. If we do see a breakout on IWM, that means we could be going to 230 and 233, but wait for that confirmation breakout close above 228. If we break down below about 221.6, we could easily come back down and retest support at 215. On the Arkk ETF, we see the most selling of all, going down 3.48%, and we do see Arkk getting very close to retesting support at that 20 simple moving average. So look for Arkk's critical support level at 107 and 106, which is another strong support level. And if we see Arkk breaking down below those supports, we are very likely going to attempt to double bottom off of 97. If Arkk breaks down below 97, it's going all the way back down into the 80s, so it will be going much lower. Remember, Arkk is still due for another leg lower, it's still in a bear market, and it still has downward pressure because the price action is still below the 50 EMA. Watch for upside resistance at 109, 112.68, and the 50 EMA right around 115. Remember, don't get overly bullish on Arkk because as you'll see on Tesla later on, it does look like we're going to continue to go down for another leg lower. On the VIX, we went up about 3% today, closing right at 18.03, and we do see the VIX continuing to struggle to break above that resistance at 18.2. Overall, that is a bullish indication, but it doesn't mean the VIX can't break over that level as soon as tomorrow. So you still need to exercise discipline and patience and continue to watch those critical levels. If we see the VIX getting back above 20, that's going to be a very early indication that we're going into a much deeper correction. If we see the VIX floating between about 16, 17, and 19, we're not likely going to see that huge wave of volatility and that huge wave of selling. So watch the VIX closely with the critical levels at 18.2 and 20, and your support level is still down here at 16.65. On gold, we finally saw a big wave of selling because we did see strength in the dollar today, and we do see gold coming down to the critical support at the 20 simple moving average at 1870. For the time being, that level is holding up, but if that level does break down as support, you're looking for a retest of the 50 EMA and support level at 1829. We still have upside price targets at 1923, but we will need to break back above 1876 before we can get there. Gold is still in a full bull trend, and there's no reason to get bearish on gold just yet as long as it's in this bullish trend. On silver, we also dropped today, going down 2.6%, and silver did close below the 20 simple moving average, which is right at 27.7. It does look like silver did find support just above the 50 EMA level, which is right around $27. We will likely retest that level as support, or we could have just tested it today and got close enough, and we could see a bounce coming off of these levels. But it's too early to tell, so you need to watch that support level at 27, and if that level breaks down, the next support level is at 26.5. Remember, we still need to break out above 28 to get back into this bullish trend breakout, and then we could head back up towards our price target at $29. Watch the trend closely on silver because it does look like it could be rolling over, and silver could be losing the bullish trend if it doesn't see the price action going higher as soon as tomorrow. On Bitcoin, we're currently up over 2.5%, but we still see Bitcoin struggling to break above that critical resistance level at $39,000. Right now, Bitcoin is consolidating between resistance trendline and a support trendline, and we need to see which direction Bitcoin is going to break out first. If Bitcoin breaks out to the downside, we'll likely retest support at $30,000 and possibly even $27,000 if we do break down below 30. To the upside, we need to see Bitcoin closing above 39,000, and then we will start to see the beginning of a possible bull run in Bitcoin if we can break and close back over 43,000. Remember, Bitcoin is still in a bear market and we're still below the 50 EMA, so don't get overly bullish on Bitcoin because it's still possible we break down to the downside and go much lower. So watch critical resistance at 39,000, and critical support is going to be the trend line right around 35,000. On Amazon, we did drop 1.45% today, and we do see Amazon breaking down below that 3209 support level. The next support level on Amazon is going to be all the way down here at 3138, and that should be a strong support level for Amazon. And if that level does not hold up, look out below because we could be going much lower. To the upside, we still have resistance at the previous support at 3209 and the 50 EMA at 3246. On Tesla, we went down over 5.3% today, and now you can see the culprit that is dragging down the Arkk ETF. Tesla is finally seeing that next leg lower, which we did predict, and we did say at that critical resistance at 626 that it could be the top in Tesla before we see another leg lower. So right now we do see Tesla heading lower, maintaining the bearish trend, and it's still in that bear market that we still need Tesla to try to break out of. But right now I did update my support level that I want you to pay very close attention to, and it's now at 546. Previously I had this level at 557, and I said if Tesla breaks down below this level, get out. Right now, I don't think that's necessarily the case with Tesla, and we are seeing Tesla going down in a very nice wave fashion, and I do think 546 should be a very strong support level. If that level does break down, it is still possible we go back down into the 400s, but don't just assume this level is going to break and Tesla is going into the 400s. Watch the level at 546 very closely, and that could be a great trading opportunity, and it even could be a potential bottom in the Arkk ETF when we do see Tesla testing that support. We will still have upside resistance on Tesla at 594, the 20 simple at 604, and the previous resistance at 626. On Apple, we went down over 1.2% today, and we still see Apple struggling as it's in this bearish trend, and it is still looking like it wants to go into a bear market. We see all of the moving averages are still stacked to the bear side, and the downward trend is still pushing Apple's price lower. However, Apple is at a critical support level at 123, and so far, that level is holding up until we see a price action close below that level. So watch Apple very closely, because it is possible that Apple did bottom out around 123, and it's going to attempt to break out of this downward channel. However, if Tesla does break down below 123, we are very likely going to get to the next support level at 119 in a hurry. Remember, Apple's in a bear trend, so the benefit of the doubt goes to the bears, and the trend is downward, which should push the price action lower. So very critical support at 123 with a potential of retesting 119. Your upside resistance is going to be the trendline breakout around 125, and then we will have resistance at 126 and the 50 EMA at 127. On the financial sector, we went up about 0.25% today, and we still see the financial sector looking very strong, closing back above the 5 EMA and still holding on to that very strong bull trend. On the industrial sector, we dropped about 0.25% today, but still maintained a price action close above the 5 EMA, and the industrial sector is still in a bullish trend. On the healthcare sector, we went up 0.3% today, and we did get a price action bounce off of the 50 EMA support level. Right now, it does look like the healthcare sector is losing the bullish trend, but the price action is still holding up above the 50 EMA, so we still need to continue to watch healthcare to try to bounce from here. If healthcare closes below the 50 EMA, that could be an early indication that the healthcare sector is going into a bearish trend and heading lower. On the energy sector, we went up about 0.25% today, and it does look like the energy sector is continuing to push higher in a strong bullish trend. We see the price action well above the 5 EMA, and there's really nothing that looks weak in the energy sector at this time after it did bounce off support. So jumping back over to the S&P 500, we can still see strength in a lot of the sectors across the board, but we are starting to see weakness building up, and we could potentially be witnessing a market rolling over. However, it's still way too early to say it is a market rollover for sure, so you need to continue to watch the price action and remain objective. Remember, we're waiting for the price action to either break above a critical resistance or break below a critical support, and that will tell us which direction this market is likely going. Remember, the market is likely going to see weakness going into the middle of June, and that's just something you need to be aware of, and you need to be cautious for the next few weeks. Don't try to be a hero, and don't try to predict what's going to happen. Let the price action do all of the talking, and right now we just don't have that clear indication on the price action. But overall, I don't think the sky is falling, and I do think after this potential correction, we could see another bull market formation. So be patient, be disciplined, and remember, on the Stocks Channel Discord, I'm giving intraday updates and analysis to help you navigate this market. I'm also bringing a lot of brand new trade ideas to help you crush this market, and I do think this is going to be one of the best times to be a Discord member with all of this volatility that we could be seeing in the market. There's going to be a lot of trading opportunities, so if you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.